Are you looking to become a leader in clean energy and an expert in clean tech? Do you hope to get noticed in the crowd as you pursue a career in this fastly growing industry? You are in the right place. Join Karan Takar as he invites clean energy leaders to share industry developments, highlight clean tech investment opportunities, and shed light on how you can increase your chances of employment in this high-growth sector. We will also discuss the energy transition across key emerging markets like India and explore partnership opportunities for the U.S. private and public sector. After all, this is the Zenergy Podcast.
Thank you, Mr. Pathak, so much for taking the time. I've been really excited to speak with you. I've been following the work of the climate business team for a few years now. And I want to start by asking you about what sparked your interest in the climate space to begin with. Could you provide some background into how you got involved in the climate field?
Sure. Well, thank you, Karan, for having me and for speaking with me. So I've been in IFC. I'm really almost a dinosaur at the IFC. I've been here for 24 years, and I've done a number of different things. And I spent about 10 years in risk, and that's when IFC initially started investing in climate. And I have to say, at that point in time, I was a little skeptical, and I'll explain why. Because solar tariffs at that point in time were 26 or 28 cents, which was expensive. You needed a lot of de-risking capital or blended finance or grant money to make it viable. But IFC was the first in that space in emerging markets. And I think we opened the door in a number of markets when it comes to renewable energy. Fast forward to a few years later, I was managing Asia. And I went and I met a lot of our clients in Asia. And these were very big names, old clients of IFC. But I really found that there was nothing unique that IFC was offering them. These clients had grown. The regional and the domestic banks were quite sophisticated. They were able to offer them, a fair amount of sophisticated products and cater to their needs. Yeah. And so for me, it was really, what is it that IFC can offer its clients today? This is, I'm talking about in 2014 and 2015. What the local and regional and even global banks are not offering. And clearly one area that we could provide a value-added service was sustainability. And fortunately, a number of them liked the idea. And that's really what sparked my interest in, I would say broadly, the sustainability area. Now, I think one of the reasons that this whole climate or sustainability is taken a little longer to take off was because initially it was considered more of a CSR activity. So, my analogy is when hundreds of millions or tens of billions of dollars were coming into the digital and the disruptive technology space, very little was actually coming into sustainability or climate. And that, I think, was unfortunate because the whole sector could have scaled up a lot more if it was able to attract commercial capital or venture capital or early stage capital as against more of a CSR approach. And that stems from the fact that my personal belief is whatever we do in this space should in the medium to long term be viable, economically viable and financially sustainable. This is not a space where it's for, it's a do good thing. Yes, you're doing good, but if it's not viable, it will not survive there. And typically what we see happening is that, a lot of this requires a bit of upfront investment, but there is always a payback. So those are the sectors that we really focus on. Having said that, there are sectors there which, because of technology and not reaching scale today, it's going to take longer for them to become economically viable. But that's exactly what IFC is supposed to do, is sort of enter some of these spaces which commercial capital is not flowing into.
Understood. And why banks during that 2014, 2015 period why were they not involved in the sustainability space? Was it because the economic viability was not there? Or was it because they were not aware that these technologies could become economically viable? Could you provide a little bit of insight into why that gap?
Yeah, so I think there's a number of factors, and I don't think there's just one factor. So one is the space was still considered more of a CSR activity. It wasn't mainstream with most firms. So that's one reason. Second is banks like scale because they want to develop expertise in a space. So if a bank is getting into solar and there's very little solar activity as of now in a country, they will, banks will want to have expertise so that they can understand the sector and scale up. That's the way they operate there. So a lot of this at early stage was relatively risky because it was not proven. We did not have scale at that point in time in most sectors. And the viability for the long term wasn't always apparent or proven. So when you look at these factors, risk, lack of scale, viability still being considered, I think banks were just not willing to jump in. Now, that's not to say no banks were doing it. There were a few banks, at least across Asia and globally, that were getting into the spaces, but it was relatively slow at that point in time, I would argue.
Understood. Thank you for expanding on that. And I do have a question later on about how the risk appetite has evolved over time since those early years with the larger institutional investors. But before getting to that, could you provide insight into the type of work that the climate business team does? I read that in fiscal year 2020, the climate business team helped to mobilize and deploy around $7 billion in capital. Could you talk a little bit about where that capital was deployed, what types of projects the climate business team likes to focus on? Thank you.
So I think it's not the climate business team, it's IFC as a whole. That's what we did, slightly over $7 billion mobilization in our own account in the last fiscal year. It's spread across a number of sectors. There are a lot of them are cross-cutting sectors, like we do a fair amount in green buildings. We do a fair amount in renewable energy, solar, wind, but we also do a lot of areas like energy efficiency. And then there's the thematics. So we've really stepped up our activity in the blue finance space. We recently brought out our blue finance guidelines. So we've done, I think, almost 4 to 5 blue bonds already, a couple of blue loans, green bonds. We're also focusing a lot now on sustainability-linked instruments, which are becoming popular. So sustainability-linked loans, sustainability-linked bonds. So it actually cuts across all spaces. I mean, I wouldn't say, so we have a breakdown, obviously, but really renewable energy used to be a large chunk. It still is as a single sort of industry. But it's not that we have sort of climate investments. What we try and do is how do you mainstream climate? So if you're financing, say, healthcare, a bunch of hospitals, how do you make those hospitals green? How do you help them reduce their carbon footprint? So that's the way we're trying to really mainstream climate into all the sectors. And obviously, a lot of our work is with commercial banks and financial sector institutions. So there it's also helping them understand the green space or the climate space, and then helping them deploy capital into the space where we provide a lot of advisory and technical assistance as well.
Got it. And are there any particular projects specifically that come to mind as a major milestone achieved recently?
So I think I would say as a categorization, I think for me, the whole blue finance space has been very heartening the way it's taken off. It's something which I sort of stumbled upon accidentally a few years ago when I was living in Asia. And I think we've done, I hope I think we should be touching the $1 billion mark in that space. So we did the first blue loan for a company called Indorama Ventures, which is a large plastics or a PET company in Thailand. It's a global company, but it's headquartered in Thailand. We did the first blue bond for a bank called Bank of Qingdao. We followed that up with a few more blue bonds this year and blue loans. So we're really mainstreaming the blue finance sort of space. And our green buildings business is growing very rapidly. And we've done some very interesting work. So sometime about a year ago, we did something on gas flaring in Iraq, in Basra. So it's a number of different sort of topical areas that we are growing in, where I think we are leading the way in setting standards and also helping deploy capital.
Amazing, amazing. Thank you for expanding on that. And yeah, I would love to hear, given all of your incredible experience, working on risk management and now leading the climate business team at IFC. Could you talk a little bit about how the risk appetite for ESG investments has evolved over the past few years? Do you feel that ESG investing is now here to stay for the long term?
Well, I definitely think it is, which is why I'm doing what I am. But I would again like to sort of come back to what I said earlier, is that it's very important that we focus and we are able to differentiate between projects or sectors which are financially viable over time and those that will require a lot of de-risking capital. Because to me, investing in climate or sustainability is really about opening new market segments. But it's important that over time, initially, till you reach scale, a lot of these sectors may not be economically viable. But I'm hoping over the medium to long term, a lot of these will be. So to me, it's definitely here to stay. But we have to also recognize that we are facing a lot of pressures today: rising interest rates, inflationary pressures, food security, energy security. Some people look at that as a huge challenge. I look at it as an opportunity. So when I look at energy security, the best way to secure your energy needs is by having your power generation capacity within your own country. So solar and wind, if you have the ability, or hydro, those are the best ways. And those are today the prices have come down significantly. So as we start to look at these sectors, I think it's important that we again make sure that as we are rebuilding after the pandemic and as we're setting up infrastructure, that it's done in a sustainable manner. Now, I think you may argue that given the potential downturn which has been talked about in inflationary pressures, will companies want to invest in sustainability? I do hope so, but we also need to be realistic. If a company is facing a downturn, a limited amount of free cash flow, should they be paying their employees and keeping their factories and their supply chains running, or should they invest in sustainability? I would argue that first and most important is to keep your business going. So this may mean a few delays here and there, but I still feel confident that in a lot of areas, people have understood the importance of sustainability, and they will try and make their future investments a lot more sustainable.
That makes a lot of sense. And in your work with financial institutions, do you find that financial institutions are coming to you to figure out which avenues to invest in? As in, are they excited to invest in different sustainability businesses and work streams? Could you speak a little bit about, I guess, the sentiments that you see within financial institutions as it pertains to sustainability investing?
Yeah, I think we're definitely seeing a lot more interest from the financial sector in the last few years. I think, and that's quite evident if you look at the growth of renewable energy across emerging markets. A large chunk of it has been financed by domestic commercial banks or regional banks. Clearly, there is a lot more interest there. I think banks have also recognized that with the emergence of dedicated pools of capital globally for climate or sustainability, if we want to attract those pools of both debt and equity capital, they need to green their operations and come into that category. So I definitely think we are seeing a lot more interest amongst our clients to help them get on a low carbon pathway. That's definitely happening.
Got it. And what about with large institutional investors? Because I know just a few years ago, there wasn't a lot of institutional investment, particularly in renewable energy. However, has that changed?
Yeah, I think that's definitely changing. I wouldn't say it's changed. But if you look at large institutional investors, say typical, the large Canadian or European pension funds, they're deploying a lot of capital. So they want projects at scale. And you don't always have that in emerging markets, barring a few, I would say, some of the larger countries, Brazil, India, China, potentially Vietnam, Mexico. You don't always get scale in emerging markets, country by country. But I definitely think the appetite of these institutional investors is to try and invest more. Obviously, they don't take the same risks as us. So we've seen a lot of investments by Canadian pension funds into the India renewable energy space, for example. Now that's a proven space. A lot of these investments have been de-risked, as in they've been operational for a few years. So they're playing an aggregation sort of strategy, I think. Yeah. But we're definitely seeing interest. But honestly, what I would love to see is not only interest, but hopefully over time, the risk appetite will evolve for some of these sectors. That's really what we need to be able to attract capital at scale. The other thing I want to say is that, to me at least, I don't think capital is the main constraint. There is capital, both domestic and international, which will come into these sectors. But what we need a lot more of is projects. A good, well-structured renewable energy project or anything which has sustainability will be able to attract capital even in the most challenging of markets, in my view. So we need more projects. So we need to work a lot more with governments on reform, project preparation, and then hopefully take those to market where we can attract commercial capital.
Got it. Very interesting. And what do you find are the major hesitations for these larger institutional investors to invest in emerging markets? I know financial flows are not necessarily the main obstacle right now, but would just like to hear your perspective on, given all of your experience in risk management, I would love to just hear your perspective on what are some of the major risks or hesitations that you find financial institutions express in terms of investing large amounts into these projects in emerging markets.
Yeah.
Thank you.
Yeah. So to reiterate what I said earlier, it's not a risk, but what these institutions want is investments at scale. And that's not there in most emerging markets. So that's one constraint. It's not a risk, but it's a constraint there. Second is what they would like is transparency. And when a project is bid out, it's transparent, how it was awarded, and just general transparency. And level of certainty that regulations will continue, that you won't change regulations midway the life of a project. You will not renege on contracts. So certainty of contracts and concessions is critical. The other area, obviously, is country risk. Yeah. In emerging markets, many of them do face a challenging political environment. So that's what investors want, to minimize. How do you minimize political risk? Then you're talking about currency risk is another major factor, because most of these large institutional investors either invest in dollars, euros, or yen typically. So most emerging markets currencies have, over the past many years, typically over a timeline, depreciated against the hard currencies, as we call them. So that's another factor. So it's really about certainty, transparency, currency risk, and obviously, last but not least, is sort of how do you get comfortable that if you're partnering, that your partner or your investee company, that these people will be fair, and there'll be ups and downs, but choice of partner is critical, I think. Are you partnering with like-minded companies, people who share your philosophy? So these will be, I think, the major factors that one considers before investing. Now, I'm not going to get into the bread and butter stuff on the viability of the project, but that's a given. But sort of
that makes sense. And on the currency risk front, are there any solutions or ways to help maybe institutional investors from, like the US, for example, mitigate against that risk factor?
I mean, in the more developed markets, you can get currency hedges, but with equity, it's a little harder because you don't know when your exit will be. When it comes to debt, typically you would invest in dollars. So then it's for the investee company to buy a hedge to make sure that the fluctuations don't impact them in a big way. But otherwise, the only way is, currency hedges really. And those are becoming increasingly more popular and available. But it becomes a little harder when you're talking about equity because you don't know when you plan to exit. But there are sort of, different tools available to help some of these people to hedge at least part of their exposure.
Got it. Thank you so much. And just like 2 or 3 more questions Really appreciate this. This has been super insightful. And I know that the IFC Climate Business Team, as you briefly alluded to, does a lot of work on activating green bonds and now blue bonds. And can you talk about like how that process works in terms of how the IFC is able to, activate these markets?
Sure. So I wouldn't say it's the climate business team. We do it collectively with our colleagues in the operational units, which is the financial sector, or what we call infrastructure or manufacturing, agri and services. So it really varies. So a large part of it is to work with our clients and provide them with technical assistance on how are these done. So there's a lot of preparatory work that goes in with our clients, with the regulators, in some cases, refining the taxonomy, providing guidelines. So a lot of hand-holding typically goes in before we can issue the first of its kind. Then obviously there's a market issuance or a private placement, and that depends. So there's a fair amount of upstream work, as I'd like to call it, that goes into the first of these issuances. A good example is the Philippines, where we did the first, second, and third, and maybe even third or fourth green bond. And then the market after that took off on its own. We were not needed. So now we've gone and issued the first blue bond. Hopefully we do another 2 or 3, and then the market will pick up from there. So our work really is about providing technical assistance to our clients, working with the regulators to make sure that the regulatory frameworks are adequate or good, helping define taxonomies or refine the taxonomy, and then obviously putting our balance sheet to work and investing our capital there. So that's how typically we do it.
Got it. And even do interest rates impact those issuances? Like now that we're entering a world with expectedly higher interest rates, do you think that would have an impact on the bond issuances for green and blue bonds? And if so,
I mean, I don't think interest rate movements per se would impact it. I think it's more what is the expectation of demand, because if you're raising a green bond or blue bond, you need to deploy that capital. And if the expectation is that economies are going to slow down, we're going to see a lot less investment in in fixed asset formation. So then that's what would impact it. It's really growth there. But other than that, I don't think interest rates per se would really impact it in a big way. I mean, obviously, people weigh the sort of cost of capital for debt equity, what's an optimal debt equity structure, and interest rates would have some amount of impact. But I think it's more on the demand side of the product that you're producing is where you have more of an impact.
got it. And my very last few questions, more on your perspective, just reflecting on your own career journey and all the amazing success you've had. I'm personally very curious to learn about whether there's any advice that you would give young people like myself or young people interested in entering climate finance on how they can, one, enter this field and two, succeed in this field. Does anything come to mind?
So I wouldn't say it's climate finance. I think for me, it's more been, a lot of my things in my life were, to be honest, accident. If someone asked me 24 years ago when I joined IFC whether I'd become the global head and director of credit risk, I wouldn't have guessed that. Or whether I'd be running climate one day, I wouldn't have been able to predict that. But I mean, a couple of things I believed in, that one should do what you really enjoy doing. And when I joined the IFC, I was doing a lot of restructuring and portfolio work, which was not considered the cool part of the corporation. The presumption or the perception was that the smart folks went and booked new assets, which is always the case in most, risk management is not the glamorous part of any institution. But I enjoyed that, I did that, and I would argue it paid off. So to me, it's about doing what you really enjoy and not doing what everyone else is doing because it's the same thing. And honestly, sometimes that's what worries me about climate, because I have a lot of very bright, highly qualified people like you who want to get into the space. And for me, it's to figure out, do they want to get into this space because it's really what they want to do? Or is it because it's the cool thing to do, which everyone wants to do? The other thing I always say is work for people that you get along with and you enjoy working with. Not only your peers, but your bosses. Now, you can't always decide with your bosses, I know. But I've always said I'd like to work for a boss from whom I can learn. So, somebody from whom I can act as a sponge and get knowledge, their experience, their expertise. To me, that's critical. So I would say these 2-3 factors. And, there's no harm in midway doing something, say, hey, this is not working out for me. There's no harm in changing that. Yeah. So advice is free. I can give a lot of advice, but to me, this is what I think, these are the factors that count for me. And last but not least is, and a part of doing what you want could mean taking risks. I've done many different things. I studied physics in university. I spent 3 years in advertising. I got into banking. I've done many different things in banking. And very often I jumped into areas where, to be honest, I was worried. Do I have expertise? Am I really the expert in credit risk when I started doing risk many years back in the private sector? So the ability to take some amount of risks and jump into the unknown, I think helps. And very importantly, I think most importantly is that to start accepting failures. In many cultures, in many countries, failure is a bad word. And I think one of the things that makes a number of, this country, the US, unique, especially California, is creativity can only flourish when failure is acceptable. Now, that doesn't mean you fail 7 times in a row, but a lot of people who succeeded have failed in their first 1 or 2 ventures. And I think the ability to bounce back then is critical. Now, having said that, other people prefer a conservative path. They don't want to take risks, and I think that's fine. Again, it comes back to what I said initially. Don't do it just because everyone else is doing it. Do it because that's really what you want to do. And if you're if you're risk averse, don't try something new. That's fine. There's nothing wrong in being risk averse if that's what you are. So that's my 2 cents on this.
Thank you so much. Thank you so much, Mr. Pathak. Really appreciate you taking the time, sharing all of that incredible insight. And thank you.
Okay, no, thank you for having me, Karan, and look forward to staying in touch.